Hello and welcome. Today we will work on Wyckoff method. We will analyze the events in the accumulation of the distribution phases, and we will cover the main guidelines for finding the best trades with excellent risk to reward ratios. So if you could subscribe to the channel and stick around for the full video, ranges that formed at the end of the previous trend break balance in the supply and demand of the market. In such range, neither buying or the selling activity will be large enough to create a significant movement towards the upside or downside. Accumulations is nothing but the sideways market activity that happens after the extended downtrends. This is a phase where smart money try to acquire positions without moving prices too much to the upside. Distributions is the range-bound market activity that happens after the extended uptrend. This is the phase where smart money try to sell off their positions without moving the price too much to the downside. You may want to watch this video first if you wanted to know the basic Wyckoff trading. Now, Richard Wyckoff often detailed the guidelines for stopping the accumulation and distribution phases based on the certain patterns that take place within them. I will try to keep it very simple and explain each phase. First, let's analyze Wyckoff events during the accumulations. Permanent support. This is where substantial buying being the provide produced support after the prolonged down move. Volume increased and the price spread wide significantly, then the down move may be approaching its end. Selling climax is the point which widening, spreading, and the selling the purchase usually. Climaxes and heavy or the panic sellings by the public is being absorbed by the smart money and or near a bottom. Often prices will close well off the low in the selling climax, reflecting the buying from the smart money. Automatic rally occurs because interest sellings pressure has greatly diminished. A way of buying easily purchase the price ups. The high of the rally will help to define to the upper bound range and accumulation trading range. Secondary test is which price revisit the area of the selling climax to test the supply-demand balance at these levels. If the bottom is to be confirmed volume and the price spreads should be significantly diminished as the market applies support in the area of the selling climax. It is common to have multiple secondary tests after the selling climax. So signs of the strength which is the price advanced on the increasing spreads and really higher volume. Often the signs to the strength take place after the spreading. A Wyckoff spread occurs when the price falls below to the trading range and makes a new panic low and springs back into its previous range. Last point of support, take low point of the reactions or pullback after the descent of the range. The last point of support is the final drive towards the bottom of the accumulations area before the uptrend, being a last point of support makes the high lows and it returns toward backup. A backup is the common structure element presents more substantial price markup and can take a variety of the forms including to the simple pullback or a new trading range at the higher level. Now let's analyze the Wyckoff phases during the accumulations. The phase A up to this point supplies that there have been dominations. The decrease of supply is evidence is primarily support and the selling climax. These events are often very obvious on the chart with the widening spreads of the heavy volume. Once these intentional sellings purchases have been reviewable, an automatic relay typically occurs. A successful secondary test in the area of the selling climax will show less selling than the previous and narrowing of the spread and decrease the volume, generally stopping to the or above the same price level as the selling climax. If the secondary test goes slower than the selling climax, you can anticipate easier new lows promoted consideration. The low of the selling climax and the secondary test and the high of the automatic relay set the boundaries of the trading range. Sometimes the trade may end less dramatically without the climax prices and the volume actions. In general, however, it is preferable to see the premilitary support selling the climax automatic rely on the secondary test, as this provides not only to the more distinct landscape but a clear indication that the smart money have definitely innovated accumulations. Phase B In the phase B, smart money are accumulating the reliably low prices in the anticipations of the next markup. They are usually multiple secondary testing during the phase B, as well as the upthrows according to the upper end and the trading range. In phase B, their price swings test tends to be wide with the high volume. As professional absorption the supply, however, the volume on the downside within the trading range tends to diminish. In phase C, price goes through the devices tests or the remaining supply, allowing to the smart money to entertain where the price is ready to the break market. As I said earlier, spread is the price where the below of the support level is the trading range. Established in the phase and B that quickly reverses and moves back into the trading range is an example of the bear traps because the drop below supports appears to the signal resumptions of the downtrend. In really, though, this makes the beginning of the new uptrend trade into the late sellers. In Wyckoff method, a successful test of supply represented by the springs of the shark out provided a high probability trading opportunity. The appearance of the site of strings shortly after the spring or the shark's validations. Please note that the testing of the supply can occur higher up in the trading range without a spring or the shakeout. Phase D, if we are correct in our analysis, what should follow to the consistent dominance of the demand over supply. This evidenced by the pattern of the advantage side of the strength on the weighting price spreads and increases volume, as well as the last point of support on the smaller spread and diminished volumes. During the phase D, the prices will move at the last to the top of the trading range. Last point of support in this phase are generally excellent phase to individual or add long positions. Phase E In phase E, the price leaves to the trade range. Demand its full control and the markup is obvious the I1. A new trading range can occur in this concept is also known as the re-accumulation by the smart money. This trading range are sometimes called stepping stone on the way to the even higher prices stage. Now let's showcase Wyckoff events for the distributions. Psi primarily supply where the smart money being uploaded shares after the pronounced up move. Volume extracts and the price appears wide. We see buying climax during which you will see the increase in the volume and the price spreads. The force of the buying reach the climax with heavy or the urgent buying by the public being filled by the smart money and prices near the top. Buying climax often the consolidations with the great earnings reports or all other good news, since smart money requires the huge demand of the public to sell their shares without lowering the prices, are automatic reactions. With intense buying substantially diminished after the buying climax and heavy support continuing, automatic reactions take place. The low of the sell-off helps to define the lower boundary of these distributions. Trading range. Secondary test in which price reference to the area of the buying climax to the test the demand supply balance at these price levels. For the top of the being of unit supplies must outweigh demand volume spreads should those decrease as the price approach the resistance area of the buying climax. The secondary test may take the form of the outwards UT, in which price moves above the resistance, represents by the buying climax and the possibility of the secondary test before the quickly reversing to the close below resistance after the upthrows price often tests the lower boundary of the trading range. Signs of weakness observable as the down to move to the slightly past to the lower boundary of the trading range, usually occurring on the increased spread and volume. The automatic reactions and initial sign of the weakness indicate changes of the character. In the price actions, supply is now domination. Last point of supply. After the testing the support and the sign of the weakness, really on a narrow spread shows that the market is having the considerable difficulty avoices. This inability to rely on may be due to the weak demand, substantial supply, or both. Last point of supply represents thousands of the demand and the last wave of the smart money distribution before the market being up those after the distributions occurs in the later stages of the trading range provides of the definitive test that the new demand often break out above the trading range resistance, and up those after the distributions is not require structures emerge. And here the Wyckoff phase during the distributions. Phase S. Phase S is the distributions trading range markets to the stopping the prior uptrend. Up to this point, demand has been dominations and the first significant evidence of supply. Entering the market is provided by the primary supply psi and the buying climax bc. These events are usually followed by the automatic reactions AIR or the secondary test ST of the buying climax, often with the dimension volume. However, the uptrends may also terminate without the climax action instead of the domination exhausting of the demand with the decreasing spread of the volume. Phase B. During this phase, smart money revives their portfolios on the initial short positions in the actions of the markdown. This process leaves the clues that the supply-demand balance has tilted towards the supply instead of the demand. For instance, side weaknesses are usually followed by the significant increased spread and volume to the downside. Phase C. This is the most interesting phase of the distributions. This is the time when the many retail trades go long during the most popular trades. In other words, phase C is the phase of the misleading retail trades. Aggressive trades open to the short after the upwards as they have a very good risk-reward ratio. But big players are not ready to allow the retailers to make money so easily. That is the reason why very often that they can see the few uploads one after other basically stop hurting the inactions. Consider trades wait open to the shop until phase D and last point supply at phase D. Phase D shows the last signs of the demand. The price goes through the trading range supports that evidence that supply to clear dominations increased easier with the clear breakout of support or with the decline below the main point of the trading range after the upside or upwards. after distributions. The best trading strategy in phase D is to go short and last point of supply. Phase E. In phase E, a Wyckoff distribution spread leaves the trading range and supply in the control. Once trading range support is broken, the major signs weaknesses with the breakdown is often tested with the rally that favors of the near support. This also represents a high probability opportunity to the initial short positions. After a significant down move, climate actions may signal to the beginning of the redistributions trading range or of a new phase of the accumulation. If you learned something new and found value more about Wyckoff videos, please hit the like button, since it really helps us and get subscribed to stay up to date or latest news. And check out the Academy program if you want to the future level up your trading. Until next time.